Dixon Tech is in focus right now. Saurabh Gupta is now joining us on the show. Saurabh, there are a lot of things to chat with you, but I want to talk about certain things which market not everybody is actually paying attention to. So, which is a set of small acquisition which you guys are actually doing, but very strategic in nature. But you're actually landing up buying strategic assets cheap. The recent ones, the few smaller ones, because usually in terms of acquisition, the larger acquisitions make bigger headlines. Smaller acquisitions tend to go unnoticed. But some of the old time watchers of your stock are taking notice how they can add strategic value in the next 1 to 2 years. Can you start by helping us understand how you're going about them?
Yeah, so good morning. Thanks for having me. So my sense is more so not so acquisitions, I would say, but clearly we will be doing a lot of partnerships and JVs with various ODM partners and also through various component to get into more components. We look for those partnerships. So clearly, one of the partnerships that we have signed recently is with HKC, which is one of the largest globally display manufacturing company, and we plan to get into the mobile displays initially, setting up a capacity of almost 20 million, and in the second phase we'll take it to almost 45 million. We will also get into the IT hardware displays, and then the potential opportunity for us is to get into other display categories as well. And another JV that we are planning to do, and for which we have already applied the Press Note 3 approval, is with Longcheer, who happens to be a Rhodium partner. And through that Longcheer, we have got some clients on the smartphone manufacturing. So going forward for Dixon, I think so the way forward for us is to do more of JVs and such kind of partnerships on ODMs as with ODMs as well as with partners who can get it to who can partner with us on the component side.
Would your revenue mix look like in the next 3 to 4 years? The direction which you guys are taking, laptops, other kind of displays.
See, I don't want to give you a guidance on any number, but clearly the order book looks extremely healthy, not only across a mobile vertical, which is the largest trigger for a growth. I think so even IT hardware opportunity is looking very promising. We have got some customers. We are in the process of adding few more large global brands. The production we should start manufacturing from them for them by next financial year. And clearly, even in other verticals like telecom, we have a strong order book from the largest two telecom companies in India on routers, set-top boxes, FWDs. And similarly, our refrigerator on the direct cool side has started, and we are witnessing a strong order book. So yeah, all across, it's a strong order book that we have, and we think that the growth in revenues will be quite significant this year as well as next financial year.
Saurabh, just taking a leaf of what you are just talking about, I want to talk about this recent joint venture of yours with HKC for mobile displays. Tell me, is it margin accretive?
Yeah, it will be significantly margin accretive. It will be ROC accretive. We will have decent paybacks on this. And clearly, we think there's a strong business case because if you look at any smartphone, almost 10% of the component which goes into a smartphone is actually a display. And there is a good duty arbitrage today on this, so which makes it a strong business case. And we already have a large customer base in this category. We have a large capacity of almost 50% of the Android smartphone market in India, and we will leverage with the same set of customers. So yeah, it's very promising here.
Okay, fair enough. Let's also understand a little bit now as to what is going to be your key growth driver apart from mobile phones. What is it that you're looking at by way of individual segments that could drive your growth, Saurabh?
Yeah, so every vertical we have a plan, every vertical we have a backward integration plan. But I think so after mobiles, I think so it will be led by IT hardware, which we have, as I mentioned to you, we have uh, close contracts with two of the largest brands, Lenovo and Acer, and of course we are in final discussion with some other large global brands, and we plan to conclude with them as well. And hopefully we should start manufacturing from them by next financial year. So not this financial year, but definitely by next financial year, even IT hardware should start contributing a significant portion of our revenues. And after mobiles, I think so it is the second largest opportunity for us in the next, and that you will see in the next couple of years.
Just to get in some numbers here, Saurabh, you are aiming for 36 to 40 million mobile phone production by FY26, right? What then is the revenue scalability that we're looking at?
It will be quite big. I don't want to give a number, but yeah, you can clearly calculate that. Last year we did 6.7 million phones, smartphones. This year we're looking at 28, 29 million phones. And hopefully next year, the kind of number that you just mentioned, a 20-25% growth on those numbers on 28, 29 million. So basically, the revenue potential can be quite significant. And that mobile as a category would be almost 60-65% of our revenues going forward. So yeah, overall, we are looking for a very strong growth in the revenues as well as profitability.
The other thing I wanted to ask you is, what is the expectation around government policies and PLI schemes when it comes to your segment? And does it seem like this budget itself, one could hear something to that regard?
Yeah, so our industry and we also have given a wish list to the government. Of course, the government, the huge focus on electronics as a sector. Clearly, the policy initiatives that the government has taken over the years is clearly aligned towards making India part of the global value chains. One, of course, getting to the large domestic market as well. So what we are hearing is, of course, the government can look at bringing about that lower tax rate for manufacturing companies once again. Second, what we are also hearing is that, and there has been newspaper articles on that as well, that there might be a component PLI scheme coming in for critical components. Because if you look at any mobile phone, almost 50% of the non-semiconductor components is almost equivalent to 150, 160,000 crores. So the government is really committed that there should be more deepening of manufacturing in India. There should be more value addition in India. And now the scale is getting created in India as far as mobiles is concerned. So they want to take it by bringing in a more PLI specifically for electronic components. And also, if you look at as part of our strategy in line with our backward integration, we have also already forwarded into displays. We are also looking for partners on other components of mobiles. So clearly, I think so that should be a big positive for the industry and for Dixon.
All right, good to know that you're sounding very optimistic when it comes to the growth projections for Dixon Technologies. Thanks so much for taking time out, Saurabh, and speaking with us on ET Now. Tell you what, we'll take a...
If you like this video, then like, share and subscribe to ET Now.